Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
How's it going, everyone, and welcome to this Thursday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. Got a jam-packed show for you today. Something is going on in Brazil. We're going to talk about that and hitting those Brazilian ETFs this morning. Of course, we'll recap yesterday's action, the worst trading day of 2017. We have some movers, some earnings, L Brands, Baba, Walmart, Cisco reporting, so we'll get to that as well. Our guest today at 8:35 will be none other than Jeff Cheek. He's a senior portfolio manager at Palatine Hill Wealth Management here in Ann Arbor, Michigan. Joel, how are we doing in the S&Ps this morning?
A little bit in the red here. We took a nice dip overnight to 23.44.50. Not much there. I have the pre-France election low at 23.40.50. Coming back on the upside. You need to get green at least here, 57.25. Do not think we'll see that pre-market high is 67 even. Crude down 20 cents. Got a nice rally yesterday. Gold taking a little pause here. Cleared 12.50, and silver just down a few pennies. Let's bring in the luckiest man on Wall Street.
Why am I lucky?
Because I had you yesterday on a wager, and you just kept on dancing away from me. I gave you odds that we wouldn't go green.
I wasn't going to take that. I obviously, the follow-through was intense there. You know, as more headlines kept breaking here, more worries. That impeach word, how many times was that said on CNBC yesterday? How many times? Every single person that came on, was talking, about impeachment. I mean, it's crazy that we go from no worries, now all of a sudden we're impeaching him. I mean, this market goes to so extremes. I don't think he's getting impeached for this. There's obviously a lot worse things he could do, which we're going to talk about in a second with Brazil. But I think, everybody's just jumping, to conclusions here. And I think, when you're talking impeachment already here, I think, it's I just
a bit premature.
Not often. There's got to be more. There's got to be a lot more to it to impeach him.
And, just on the intro, Spencer said, the worst day on Wall Street. But not the worst day for everybody, right, Dennis? I mean, finally a little volatility. Was there a little bit more opportunity yesterday? I mean, I saw it in some of the stuff that I was looking at in trading. You just want to give us a quick recap?
I just love when the VIX is away from that 10. It goes up 50% yesterday. And, I've always said my profits and P&L is always positively correlated to the VIX. I had my best trading day of the year yesterday. So no doubt, because the VIX is flying, you have a lot more volatility. You have a lot of people throwing out. And I'm a relationship trader. I trade stocks based on relationships to each other. During volatile times, those relationships get out to lunch. And that's, where, I obviously, am able to profit from that. So that's why, I like volatility, just because those relationships go wacky.
And I just think also in this market we've had since the financial crisis, you have a whole new breed of traders out there with the buy the dip mentality and whatnot. And I know you and I, back at Brighton stuff, I mean, it's just more fun when it's just wild, when the spreads are, I mean, it's just, I don't know, I feel more comfortable when the market's like that than I do when it's just sitting there in a tight range and stuff. I'm, waiting for something to happen. But glad you get good trading action. If something pops on your screen during the show, just hop off and Spencer can handle it. But let's get to some earnings. The earnings from last night, Cisco.
Before we go to
Brazil?
Earnings, let's talk Brazil.
Yeah, let's talk Brazil.
Because everybody's asking about Brazil, and this is a major story here. And if you're looking this morning and saying, what the hell is going on with the EWZ? Because it's down 15%. If you like those triple levered ETFs, BRZU is down 43% here this morning. And this has to do with the Brazilian president.
Michael Temer is being asked to resign after a newspaper published a report of a recording that exists where he encouraged this is a good one. He encouraged a top businessman to buy the silence of a jailed former congressional leader. So if you think of things, if you're not a fan of the current administration in America and you think things are bad, they're worse somewhere else. So
So bribes. We're talking bribes here.
talking on
We're
tape,
talking
recorded on tape. We're talking.
full on bribes. Awesome. So that's why EWZ get murdered. So going through them, one of your major stocks in Brazil is obviously PBR. That thing is down 17% here this morning. I mean, I'm looking at my down filter, and it is all Brazilian stocks or Brazilian ETFs. So that is obviously the source of major weakness here, at least down south. BRZU down 44% here. So major fall here for Brazil this morning. Joel, any technical levels? Let's go EWZ.
Well, EWZ, I just you know how I like to look at different time frames here on my trade station, and just pulling up the daily here yesterday. Someone had a little inkling yesterday. Look at 1, 2, 3, 4, 5, 6 green candles in a row. And this is long before that news broke. It got slammed and closed on the low. So maybe the person that did the taping was trading the EWZ yesterday because that closed on its low. Let's just go to the pre-market chart. We hit a low of 32.69 here. Not far off it. Man, that's taken out a lot of gains here. I'll just go to the monthly chart. The yearly low is 31.04. That's still a couple bucks away. I mean, I'm not going to be buying or selling based on this news, but maybe getting this guy out of there could be a good thing. So it's one of those scenarios where you come
Plus you own stocks.
if you come in, if you come in short, just saying, I don't think you're going to get much better news to to cover. If you're long,
windfall if you're
Dennis
short.
will give you advice
Windfall.
on what to do if you're long.
Be long. It's and what I always say is if you're long these things and you're in it for a day trade, this is just one of those scenarios where you're caught in news. If you're in for an overnight trade, you're caught in news and it's ugly. I mean, even as an investor, it's ugly here. This is major political news and it's hit every stock in Brazil. So I've always said I eat it. When I get these overnight major losses and it's through my target, let's say I was putting a stop even as a swing trade at like 37 or 38 bucks. EWZ is going to open at 32.90. I eat it. I mean, I don't know. A lot of people say, "Well, I can't sell now because it's so far below where I was planning to sell." But that's how you can end up with bigger losers too. So that's how I approach it. I mean, a lot of people hold these things, hope they come back. Sometimes they do, sometimes they don't. But I don't think this is going to bounce back tomorrow because this is major political uncertainty there in Brazil now.
Also, it's the opportunity cost. When you have something like this on, if you're trading a bunch of other stocks and you're like, it will affect your decision making
For sure,
doing
well,
other things.
and everything.
Yeah, exactly. So
You can't even concentrate on anything else to make other good decisions when you have that big of a loser on your board. So that's why I always say you got to stay diversified even in your trading. People will argue with me and say, "Oh, you can put 50% or 100% of your portfolio in one stock because where's it going to go?" But if you're holding stuff overnight, it can go down hard on you. And if you had a ton of your money in something like this, you could be in trouble. I never like to put more than any 5 or 10% of my trading portfolio into any one individual issue overnight, just because stuff like this can happen.
yeah, but you also like to use different hedging tools as well. But there's no way you can, hedge against this if you.
If you're hedged in Brazil versus Brazil, you're okay. But that's why with the hedges, I always try to put financials with financials. I try to put, industrials with industrials, utilities with utilities, food with food. And that's how I try to do my dynamic hedging there. But if you just, flat out long this thing overnight, it goes down 16% on you. Or worst case, you have the triple long overnight and it's down 45% on you. It's bad luck. But at the same time, I don't know if you can, the way I approach it, when I get bad luck overnight, I eat the loss the next day. I mean, even if it's my stop.
I'm trying to bring up the coffee futures, and I'm not a neighbor. I was just right. You got to check coffee futures on a day like this. Let me see if I can find it on my other platform here. Just wonder how the coffee market's reacted. Not too bad. It's holding up. All right, now can we get to some Cisco earnings?
Well, I want to go Alibaba on you because Alibaba has been a lot more wild. It's been really wild here this morning. Baba just reported this morning. Spencer's going to give you those numbers in 2 seconds, but saw this thing drop over $10, and then it rallied all the way back, and now it's dropping again. So Alibaba is a wild child here this morning. Spencer, give us the details on Alibaba.
63 cents versus 65 cents. Sales of 5.61 billion versus 5.23 billion. So a miss on the EPS, beat on the sales number. Also a $6 billion buyback plan.
$6 billion buyback got initial pop after the results. And I was looking at that. I was like, those results don't look that great to me. I do see the buyback, so they like that. But I was tempted to fade it, and I didn't. I'm kicking myself there. And then I watched it go from 123 all the way down to, where did it get down to, Joel? Like 112?
Yeah, 112 even. And then you got to bounce off that. Yeah. Trading 118.28. The thing about this one, and I was watching it, and adding to the pain in this one is all the people that piled into this thing over 120, right? It made the all-time high. And, I mean, when a chart takes this long to get back to an all-time high, I don't even have it here, when it 120, then it goes to 57.20, and then it takes a year and a half to come back and make a new all-time high. Yeah, you could be playing it over 120 in a breakout, but I think that's what adding to people's pain here. Boy, wild range. I don't think we're going to see that 112. I mean, anything is possible, but a lot of people that hit it there are probably regretting that. We do have a gap fill down in that area. You need to get down to 113.17. I don't know. It's hard since you're $6 off the low. I would just be looking at the half and whole numbers until you find a big bid or a big offer in either direction.
And obviously Yahoo moving around with this, although Yahoo is just widespread and obviously it's trading a little bit with it, but it's having trouble keeping up. I was trading the Yahoo against it a little bit there just because it lags a little bit, but it's tough because it's spread so wide. It's 60 cents wide here right now. But typically Yahoo moves pretty much with Alibaba. Alibaba falls 5%. Typically Yahoo falls 5% too. If you look at Alibaba right now, it is trading down 2%. Yahoo's down 2% as well. So right now it's in line. But on that report, man, it was hard to, well, there was just no market in it. So I was trying to offer it because Alibaba was going down, but there's nobody lifting your offers.
All right, and interesting, if we could get back to the lower end of yesterday's range, 120.50, that's only a couple bucks away. I mean, I'd look at that as resistance. The close right there, too, 120.72. So on a pop, if you caught long, you may be able to get out at the mark of 120.72.
Also reporting earnings last night was Cisco, CSCO, and that stock is down a cool 7% here, getting the beats. Stock was up near its highs there just a couple days ago. Those are long gone now. We are talking about giving back pretty much its entire gain for the last 3 months. Spencer, Cisco have to say?
Yep, a not great Q3 and a light Q4 outlook. Q3 EPS 60 cents versus 58-cent estimate. Sales of 11.9 billion versus 11.89 billion. So okay numbers there. Q4 adjusted EPS though 60 cents to 62 cents. That's at the low end of the estimate, and sales they see a 4 to 6% decline in the quarter.
Ugly, Joel. Give us some support here in Cisco.
I mean, come on. I mean, they beat by 2 cents. They were in line with revenues. I mean, they see 60 to 62 versus estimate of 62. I mean, is that horrible news? I guess so here. 30.90 is your pre-market low. You bounce 50 cents off that. I would just have to say 30.90, 31 even. I definitely would not be sure to get down there after it just spiked down there and came back. Psychological level here, 30.42. I'd even get out. I mean, anywhere in the 30 handle to me is just, at least for today, a short-term buying opportunity. Think about how much stock this thing would have to trade to go from 34 to 31.5, during a regular session. And how about the guy at Morgan Stanley that upgraded this on Monday, man? How do you think he's feeling?
Is that what the pop was on Monday?
Yeah. Yep, on Monday before the
open.
open.
It's a guts. He went ahead of the report. Obviously
Why
thought
would
it
you
was going
do
to be
that?
okay. It wasn't.
Yeah. Upgrade Cisco from equal weight to overweight, and then you could see that's when it made. I think you said it was trading higher in the pre-market session, wasn't it, on Monday, Dennis? I thought you said it was up at like 34.70, which
It
was
was.
yeah, which was above
I
the
actually
high of the
got some
moon.
shorts off at 34.60 and 34.70. I covered before the year. I covered yesterday, so I made 30-40 cents on it though, which was nice. But obviously, wish I would have held it. There's my scalper blood.
Yeah, for sure. BRZU now .2276. Let's just take a look at that and see if there's going to be any kind of a bounce here. Wow, is that cut? Oh, that's because it's triple levered, man. Man,
Yeah, yeah,
those.
yeah. That's a BRZ. We already talked about it earlier.
Oh
But yeah, it
man.
continues to go down. It's triple levered, so it's going to go down 3 times as much as basically the EWZ. EWZ is down 18%. There you go. But they
Okay.
always never follow quite as much because there's a obviously deterioration there. They never do quite as good as they're supposed to do. It seems like on the daily basis they do, but long run I still hate all the triple levered products. Not a fan.
All right, more
So
earnings.
okay, jumping over here to
Walmart.
L Brands from last
Or,
night.
or L Brands, that works. L Brands reported Q1 adjusted EPS 33 cents versus 29 cents. Sales of 2.43 billion versus 2.44, just under the estimate number there. So a beat on the EPS and a just miss on the sales. They did, however, raise their outlook for the fiscal year. The EPS was $3.05 to $3.35. Now it's increased by 5 cents at either end of the range, and the estimate was right in the middle of that range. Also, comps are
Stock
down.
getting a lift.
Comps are down
It's
9%.
getting a lift. We talked about retail yesterday. Retail has been in the doghouse for months and months and even years, it feels like. And yesterday, they still hit them pretty good. I mean, Target gave back a lot of its gains, but a lot of the retail stocks weren't down. And that was a positive because you had so many stocks across the board that were just getting whacked. Retail actually held up okay. So now you come in today, Walmart, which we're going to get to in a second, is trading a little bit higher. You've got L Brands trading higher. I mean, this stuff has already been hit. So this isn't the stuff they're coming in and hitting. They're hitting the other stuff because they've already hit this stuff. So that's why, I think retail is not necessarily a safe place to hide because retail is never a safe place to hide. But I don't see it getting hit as hard as the market right now because the stuff's already been hit.
All right, so let's do L Brands. I was just looking at the Walmart chart here for a second. First, go to L Brands, and before I even pull the chart up, I mean, 59 is what Target hit in the pre-market. That is 59.19, and then from the regular session on, I don't even think Walmart bounced. I think it was a penny off the high. That higher open, 56.96, hit a 56.97 high, and then kaplooey. Of course, the market had something to do that as well. Still ended up green on the day. L Brands, I'm not sure if you get that exact same scenario, but you got a double top after the number at the 52.68 level, and I just see this high sticking out. Above that, you have 53.13, but I don't know. That pre-market high could keep a cap on things. Might not even see it in the regular session.
Also reporting earnings was Walmart. Spencer, give us the results for Walmart. Joel, break down the technicals.
Walmart Q1 EPS of $1 versus 96 cents. Sales of 117.5 versus 117.7 billion dollars. They see Q2 EPS at $1, $2.08, and $1.07 was the estimate there. So in line, I guess, for the most part. They see Q1 comps for the U.S. were up 1.4%.
Stock got a lift, and we saw this yesterday with Target. Target got a huge pop, but by the end of the day, it had pretty much given it all back. And we were warning yesterday, saying hard to chase up a retailer up $3-4 because there's just so much overhead supply. That overhead supply took the stock down yesterday in one day. I didn't think it was going to give it all back in one day, but it did. So it's so hard to buy these retailers when they're trading up. I know Walmart, big discount, but there's overhead supply here too. We're up here in the 76 handle for a week and a half. It's already leaking here now. I wouldn't be surprised if that gives it back to.
Yeah, I don't know why someone would buy this up to 77.58 here in pre-market trading.
Come on.
Yeah, Dennis, it just did.
77.58?
Yeah.
Is that right? How much stock traded there? No, it can't be right. Is that right? It might be right.
Yeah, a couple thousand shares traded there.
Oh, Guys, I'm gonna tell you, whoever is out there buying, these big box retailers on earnings reports, it's thin. It's so thin after hours and in the pre-market there. So, it can go up on a couple thousand shares, a couple. This is Walmart. This isn't, some little tech stock's gonna take off 5 points. A 2 point move for Walmart's absolutely enormous. You're buying Walmart at $2.50. You are asking to lose money.
Okay. That's
That's
the
my rant on that one.
All right. Settling in here in the pre-market session at 75.90. I'll just look at the multiple highs and the Dennis alluded to in the 76 handle, 76.27 and 47, another high at a quarter. So pick it there, 76 and a quarter, 76 and a half. That would be, to me, resistance. I don't think we'll see that 77.58 print. Like you said, it's Walmart. Someone hit this down on the other side to 73.52, but I wouldn't be real concerned until it gives everything back and goes right on the session, but then you have yesterday's low there. It's 74.96, and we just got another whoosh down in the S&P.
We're whooshing
What's
right
going
now.
on, Brandster? Something more Brazilian bribery lies or something? 46 and a quarter. We are now
Whoosh.
2 points off the low of the
Whoosh.
session. Kaplooey, as Dennis would say. I like 40.50 on the downside, Dennis. That was your April 21st low, and that was a low that, and this still really upsets me, Dennis, because the day after the French election is when we made our bet, and it was at 23.75. And I thought that we would come back and fill that gap, down to 23.50 area. And you just got just a couple prints over 2,400, and now we're right back down here.
Yeah, this is getting hit here pretty hard here again. 2-day rule here. This is, I came in short today for the reason I was talking with Jamie Upright. I was coming in, I told you, Joel, too, I was coming in short, which obviously is going, or it looks like it's going to work for me somewhat here. Still materializing here because we're not down that much. But the same thing. These things do, when you get a big down day like this, it typically takes a couple days to at least work itself out. Usually the next morning is a safe opportunity that you're going to get some follow through. So overnight, the short, is working here again. Here we are, we're down 9 points, getting follow through on all the same stocks that were getting hit yesterday. Bank of America murdered yesterday. It's getting hit here again today. You've got, stocks like, obviously Goldman, Morgan, JP Morgan. They're all getting hit here this morning too. So financials are getting hit hard. You've got steel getting hit. You've got all the same stocks were getting hit yesterday, getting hit here again right now.
Right, so if you're looking for double bottoms, might not quite be there yet, but below that pre-market low, I mentioned again, I kind of like 23.40.50. All right, Dennis, we had to cover all the earnings reports.
We didn't get all of them. We just a couple other ones just quickly here. So Ralph Lauren also reported earnings. It is trading up. The retailers, like I said, have been getting a little bit of a bid here from the last couple of days. And then we also had Children's Place PLC, which is getting a huge pop here. So retail looks like it's going to have an okay day today, despite everything else happening in the market. Spencer, give us the details here. Ralph Lauren and Children's Place.
We'll do Ralph Lauren first, and I'll let Joel do some technicals on that. Ralph Lauren Q4 adjusted EPS 89 cents versus 78 cents. Sales of 1.6 versus 1.56 billion dollars. So, like you said, good numbers. There they see Q1 sales are down in the low double-digit range, and the fiscal year 18 sales they see being down 8 to 9%. So that's not good. But they did report a good Q4.
Ugly. Or not Ralph Lauren, but Ugly Market. I was looking at the spruce here again. So Ralph Lauren up 3% here. So you're getting a lift. Again, these stocks already get hit. I mean, Ralph Lauren, look at it in the last week. It was $84 a week ago. $72 coming in the earnings. They had to have a disaster report for this to continue to go down. That is not the case. Stock getting a little bit of a bounce here. Retailers are finding a little bit of a bid here, a little bit of reprieve from the down whoosh that we've been having with them.
Maybe just more buyers on a pullback, because there's going to be sellers here. We popped above $77, 77.75 on very light volume. Now we're only up 231 here at 75.06. I mean, looking on the dailies, at 76 handle looks really open. So if it does start to take off, I want to, even though the pre-market high is above that, I wouldn't mind throwing something out at 76 and a quarter or so. Your 2-day high, actually, it's a little bit above that. It's 76.57. So there's a lot of air here, but we've already given back a couple bucks. And then what was the other retailer? Children's Place.
PLC.
Oh,
Yep.
jeez.
Q1 EPS here for $1.95 versus $1.64. Big beat. Sales of $436 versus $422 million. Comps up 6%. They're also raising their guidance by for the fiscal year by 60 cents on the low end and the high end of the range.
This stock is just an unbelievable retailer. It's just been a monster, continues to go up. We're sitting at an all-time high here on PLC.
Yep.
And then after all this, right here, after the retail debacle that we have seen in the last year, Children's Place, a retailer, a mall retailer, even is actually at an all-time high. That's incredible.
126.75. To me, the relevant numbers, the former all-time high, 125.30. So play it above that. 125.30 is the former all-time high. Once again, man, they sold this thing hard off the last couple days, and then presto, in one session, you're getting it back. So golden opportunity. I mean, of course, shorting these things can be dangerous, but if you got caught in that 3-day sell-off from the all-time high, presto, you're right back up, making a new all-time high.
Just jumping over here to casino stocks. We've got MGM, Las Vegas Sands, and Wynn all getting hit here this morning. Last night they were getting hit hard. Not as much now. WYNN. I think we had some Macau data come out after the bout. If you look at the chart after hours of WYNN, it was down as much as $6. Las Vegas Sands was trading down about 2.5, and MGM was trading down another buck after having a pretty ugly regular session there too. So you had multiple casino stocks getting hit here. Maybe just do some quick technicals here on the casino stocks, Joel. And Spencer, did you have the Macau data?
I don't.
Okay. Anyways, there was Macau data that broke last night. And that's why they were getting hit.
Hit $30 twice here in MGM, and you got to bounce. Also a daily low at 30.18, so I like 30 as support in MGM. Coming back on the upside for resistance. 31.08 was yesterday's low, so looking for a gap fill, maybe get an offer out there at the close. The close was 31.16. Let's take it Win, and this thing has had a nice run, getting hit on some data. $4 off its pre-market low of 116 and a quarter. Let's look at the Win chart. This thing has just had an incredible year. Well, if it keeps really going into reverse, I like the low before it had its earnings report, 115.73. That's only 15 cents away from the pre-market. And in order to get to the bottom of yesterday's range, you got a little ways to go. 122.39 was yesterday's low. And then also we'll just go to Caesars here if that got hit along with the rest of them. Lower price stock, so you didn't get as much price.
It doesn't trade as much.
Yeah.
There's not as much activity. The better ones to look at MGM and Las Vegas Sands, obviously.
I mean, if you could get this thing near 1050, 1060, you had two lows in that area. Coming back, closed near $11. So look at the marks as a potential resistance point.
Let's get to this Pandora Sirius story from yesterday. So New York Post reporting yesterday after the bell that SiriusXM is in talks to acquire Pandora, and there was a comment in there that it could be for as much as $12 to $13 per share, which seems a little high. Just
stock got a huge pop here after hours, and well, how high did we get, Joel? First of all, after hours last night on this New York Post article,
only 1065.
1065. Again, this just shows you how much irrational it is after hours. I mean, it's illiquid, but you get a few traders that just go crazy when they see a headline. It's a rumor that the stock might get bought out from 1250 to 13. Stock closed 893, and they're buying it up to 1050. They're already buying half of it up just on a rumor. So your upside, if it's going to go to 12, 13, if it actually materializes, you've just given up half of it by paying up that much. It's already given back. Now it's at 964. We've seen these rumors before. Most of the time they don't materialize here. So don't chase rumors, guys. That's another lots of tips here on the show today. We had Jeff Goldman on just a couple of days ago, and he wrote a book, 20 common mistakes that all traders seem to make. I would add another one that I'm not sure if it's in Jeff's book or not, but chasing rumors. I mean, there is just so many traders go out there chasing rumors, hoping. We saw Twitter too when rumors were, it was going to get taken over from 14 to 25, and it didn't materialize. Chasing rumors is a good way to lose money too.
I'd still keep an eye on $10 here. Three highs right at the $10 level. Currently trading at 965, up 72 cents here. So still keeping out of that pre-market high. I mean, when they don't go right to the number, like when they don't go to like 1240, 1250, then I don't put a lot of credibility in that New York Post rumor at this time.
I mean, there's, New York Post is a credible source. So, there could be rumors there. But that being said, they're just rumors here. So when you've got just rumors, it's hard to just say, oh, yeah, let's just go buy this thing up 10, 15%. I mean, that's, a lot of these, I'd say, 80, 90% of the time, some of these rumors never materialize. So it's another thing if they've got, a suitor, they've got, some, they've actually got, all detailed. But even that, it's hard to chase these things up because when the deals don't come to fruition, the stocks go right back to where they came from. So you're already, your risk return is already getting skewed. When you're paying up 10.50 and the thing closed 8.93. Plus, the company, is in a world of hurt here too. So doesn't get bought out, could have more problems.
And boy, just came down to the low of the move yesterday. So anybody trapped in that one just love seeing the pop, maybe to perhaps lighten up.
Johann Smith, great point. The Colgate rumors, yesterday too. This stock obviously didn't pop nearly as much, so it's reasonable here. Plus, it's also reasonable that Colgate could get bought. We've heard Colgate rumors before. When rumors start materializing again, there could be something to that. So I don't think this is the case where Colgate's going to go right back down to 72 because the deal doesn't happen in a couple of days. We had rumors before on Colgate. They were talking about $100 in CL. So stock closed 72. They're paying up 74, $75. They're paying up 2-3%. Not paying up 10, 15, 20%. So I think it's more rational, that Colgate was obviously, only trading up a couple bucks. They're going to 80, 85, 90. That's when it gets irrational. But here it is, 74.35. It's trading down here in the pre-market because we haven't seen anything materialize here, obviously. And I don't know if there was comments in the company or not, but it is giving back some of those gains. I like Colgate back in the 72, 73 area. It gets back there to where it came from. I think, it's a defensive stock. I think it's a stock that works well in an environment where we're going down, which seems to be what is happening here right now, at least with the overall market. So, I like Colgate. I don't like paying up even $2-3 though because I'm cheap. Comes back down to that 73 low maybe from yesterday or into the 72 handle. I'm interested.
All right, let's go to the chat here. John Dotson, I don't know if I've seen him in the chat before, so let's just cover a few of his stocks.
Sure.
John Deere reports tomorrow, and BMO expects a nice beat. Now, I don't know what the BMO analyst is looking at here. Really a nice run and didn't give much back yesterday. So, I mean, going into a report, stock at all-time high. I don't know if you want to use BABA as an example. I mean, not saying, it's not going to be a great report. I think they'll protect that high at 114.96. I mean, cut Cat do. Cat had the big pop after its report.
It did.
And did it give it back?
Yeah, slowly. It's been trying to give it back slowly here. It's been a slow leak in Caterpillar. It hasn't given it all back yet, though.
All right. I don't know. Any thoughts on Deere all-time high heading into the report?
You know what? I'm wishy-washy on this one. It hasn't really run up much into the report. When we see these classic, that's up 10, 20% going into the report, then I'm concerned. There hasn't really been a run up here, though. It hasn't done anything for 3 months. I mean, it's like the same price where it was in February. Sure, it hasn't given much back, but it hasn't really run up much either. I think the numbers actually do matter on this one. I think if they blow it away, I think it goes higher. I think if they miss, it goes lower. So it's one of those cases. Sometimes you get a scenario where the stocks run up so much that they have to blow it away for it to go higher. And if they say anything, only okay, it's going to go down. I don't think that's the case. I think if they beat, it's going to go up. I think if they miss, it's going to go down just because it hasn't really done much.
URI, United Rentals, is also on its buy radar. Let's see what happens here. Is it trading down? Look at that one. I really like that 105 level because you hit it yesterday. You had another low at the beginning of May. And then look at all this congestion that you had here in November and December. So you also could, do a 50% retracement from 70 to 135. It's probably a little bit lower than that, but for 105 to be a significant level for this long period of time, I like it. Of course, you start cutting through it, you can see there's not a lot between 105 and 100. So I wouldn't fall in love with it, but there's definitely significance.
I don't like that candle. And the concern, because it's such a big candle, and you know how I like my 2-day move, and this is, a potential, I guess it's almost a 3-day move, because I had a bad day the day before, too. If it takes out the yesterday's low 104.72, starts going 104, I think you could see $100. Maybe not today, but I just don't like that candle, so I was so hard at it. I'd rather see it drift down there and then maybe bounce, but it was so hard at it that I think you don't have anybody that's jumping in here trying to pick the bottom right now, and especially in this market environment. I think that's a little bit scared. So I think there's a time and place to be calling the bottom in this. I don't think that's the case for this one. If it holds 104.72, I agree with Joel. The 105 has some relevance. If it doesn't hold, I think it sees $100.
All right, insider buying in Kite Pharmaceuticals. I mean, this is just out of favor sector here. So it's kind of hard with the political uncertainty to get real excited about it. I see the low just under 67.50 that we can keep an eye on. All right, you know what? Here, it's time for a guest, and it's a new one at that.
We do have a new one. I just threw in news on him in the chat. It's being thrown around on Twitter. I don't know if this is true or not, but that Roger Ailes is dead. So keep that in mind today. But anyway, let's go to that's from Drudge. Let's go to our first guest though. That's Jeff Cheek. He is a portfolio manager at a firm around us. Actually, he's a local Michigan guy. He's from Palatine Hill Wealth Management. We'll be right back with Jeff Cheek.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Alcon, along with Dennis Dick and Spencer Israel. Jeff Cheek on the line, Senior Portfolio Manager with Palatine Hill Wealth Management, working in one of the greatest cities in the world, Ann Arbor, Michigan. Jeff, how you doing today?
I'm doing well, Joel. Good morning.
Yeah, thanks for coming on the show. You're a senior portfolio manager now for Palatine, but just give us a quick description of your background.
Yep. So I spent 15 months with PricewaterhouseCoopers in Detroit doing some external auditing. After 15 months of everybody hating me and as an auditor, I decided to look for other opportunities within the financial markets. I joined Telemus Capital in 2011. I spent 6 years there as their fixed income analyst as well as fixed income trader. In addition to that, I worked on their external manager due diligence for fund companies, ETFs, and private alternatives.
So you got that strong accounting background. So how do you use that in analyzing the overall markets, and in particular the fixed income markets?
Yeah, so in terms of the background, it allowed me to get a very good and firm base in terms of understanding balance sheets, income statements, as well as cash flow statements. Through my audit experience, it allowed me to then better understand how those 10Ks and quarterly reports were put together, how they were tested, what sort of accuracy you can lend to that. So carry that through to the markets, and then even more specifically to the fixed income markets. That is basically the entire thesis and foundation that we start our analysis on. So we care most about cash flows. We care the most about interest coverage. And through the accounting experience gained, we're able to tie out and figure out which of these companies, both in the investment grade arena as well as the high yield arena, are actually going to be able to pay us back. So it allows us to get a more in-depth and a deeper dive into each company through the accounting experience and through the financial statement analysis.
So will you rule out investing in a company or buying their debt just based on the balance sheets and the criteria? Is there certain warning signals that you look for when you're examining these companies?
Yeah, both from equity as well as a fixed income or debt standpoint, there are a lot of red flags that we tend to look for. Companies that aren't cash flow positive, specifically on the debt side, that's very important. Our main goal is not necessarily the growth of the company, their PE ratio, or same-store sales, for example, speaking of retail earlier this morning. We focus a lot on cash flows and will they be able to pay us back. So the cash flow statement to us is basically a line into the cash in and cash out of the company, and it helps us to better understand, will this firm pay us back? Additionally, the balance sheet will also help give us some insights into how they're operating. We look at their days in accounts receivable. How quickly are they able to collect on their money? What about their days outstanding in terms of paying companies back? Do they stretch that out, getting better credit terms in terms of giving out money, but then are those accounts receivable turning over quickly so that we can make sure that, yes, this company is generating revenue, it is coming in, and from that standpoint, we can then look at the safety of the firm to make sure that at the end of the day, they're going to meet their obligations to not only us, but to shareholders as well.
So what's it like being a senior portfolio manager on a day when the Dow goes down 350 points?
It's no different than any other day. Markets are going to move up. Markets are going to move down. We take a balanced approach in terms of how we look at the market. So yes, obviously Dow goes down 350 plus. We're going to get a few more phone calls, but luckily we've set the tone for not only our firm but also with our clients that this is expected, that you're going to see corrections within the market. You're also going to see days where it's up 350 points. So from our standpoint as a senior portfolio manager as well as for our firm, this isn't an atypical day. We know this is coming and we want to keep a balanced and steady approach. So we try not to let a day such as yesterday or even potentially a day like today that looks like we're going to be down pretty significantly at the open as well, just not rattle us. We stick to our philosophy, we stick to our approach, and that's what's going to get us through difficult times such as yesterday.
We're on the line with Jeff Cheek. He's a senior portfolio manager with Palatine Hill Wealth Management. Jeff, let's just talk. I mean, if you're talking fixed income, you're talking the market, you're talking dividend stocks, you got to talk about the Fed here. And right now, with everything that's going on in Washington, the Fed is kind of taking a back seat. Also, the earnings season here. Just give us your short and your long-term outlook here for interest rates, what the Fed's likely to do here for the remainder of the year.
Yeah, so if you asked me 2 or 3 days ago or even a week ago, I would have had a much different answer. However, given this political climate as well as how it's impacted the equity markets, we've seen the futures probability of a June hike for the Fed decrease from 90% last week to 70% at the beginning of the week to 60% as of this morning. So I would, in my estimation, I think that depending on how these next few weeks transpire, we have about 3 weeks until the Fed meeting. On the short side of it, I would look to see, does the equity market stabilize? If it stabilizes, I think you see in the short term, Fed continue to raise rates. They feel that the economic situation and status of the country is on good footing, especially with another good jobless claims report this morning. So in the short term, it's going to really depend on the equity markets. If we get that stabilization over the next 2 to 3 weeks, I definitely think that there's going to be a June rate hike. However, if we see in the short term equity markets continue to sell off, you're going to see Treasury rates fall. And as such, I just don't think the Fed is going to be willing to pull that trigger given potential, say, another 2 or 3, 4% correction from here. In the longer term view, I don't know what I'm going to do a week from now, and I certainly don't know what I'm going to do 6 months from now as it relates to interest rates. So, in terms of a long-term view, we obviously, and have been saying this for a while, that the interest rate environment has been artificially held low. We would argue that, yes, it's going to go up. When, to what magnitude, or to what extent, there are much smarter people than me that can't figure that out either. So we definitely argue that. Go ahead.
I was just going to say, so the market or the Fed is market dependent and not data dependent?
I think that they would like to be solely data dependent. However, they understand that their movements, what they signal to the market, does have an influence on what investors think. So, for example, let's look back to 2013 with the taper tantrum. Just the brief mention of the potential of tapering the financial stimulus sent the markets, crashing in terms of the equity markets. So from that standpoint, I don't think it is solely market dependent and it's not solely data dependent, but I definitely think they do take into account what is happening in the equity markets, what is happening geopolitically in their assessment, and if they feel that a rate hike can be enveloped within the investment fold without causing any significant impacts.
All right, before we let you go, just look at some of the different sectors out there and classes in the markets here. A little bit of a pullback. Every people, looking for buying opportunities. Are there any particular, sectors that you're, looking to pick up some of their fixed income or some of their debt here on this pullback in the market?
Yeah, so definitely we think that, at least as it relates to equities and broadly speaking, we felt, and unfortunately it happened the day after it slightly corrected, but we definitely felt domestic equities were overvalued relative to international. We think that international equities offer a little bit more upside and value relative to domestic. Within the domestic marketplace, we still like the mid-cap space the most out of the three. We just think that there's a lot more opportunity and growth within that asset class. As it relates to specific sectors, some of the areas that we were negative on coming into the year have continued to be that. Financials is one of the areas that we have continued to avoid post the huge run-up at the end of 2016. We just think that given the geopolitical risks right now, if he doesn't get some form of tax reform as a result of this potential impeachment, and by he, I mean President Trump, we're going to see a larger pullback in the financial sector, and that's something that we are not going to want to be a part of. Conversely, an area that we see great opportunity in sector-wise is consumer staples. The growth within wages has continued to grow. We see inflation continue to be pushed up. As such, we just think that your consumer staples, such as a company such as Walmart, who again did report and did very well, we think that firms such as that are going to be able to continue to provide areas of opportunity in the next 6 to 9 months, especially if you see a potential pullback as a result of Trump's current situation.
And I just got to ask you about some of these high flyers like Tesla or Netflix or do you even those companies, with their balance sheets, do they even come close to being on your desk to look at for fixed income or investment opportunities?
So from an equity standpoint, Tesla, as recently as I think 2 or 3 weeks ago, they became the largest U.S. automaker by market cap. Yet they produced 25,000 cars in one quarter. We definitely think that Tesla, from a stock standpoint, is overvalued. It's very much a momentum-driven security, and as such, that's just not our philosophy to get involved in in a name such as that. However, as you mentioned, Netflix, for example, Netflix is a position that we hold within our fixed income portfolio. They are high yield in nature, so they are in the junk status, but they have a really good subscriber base. The growth and the continued stability of that base is, keep in mind, we don't necessarily need them to grow rapidly from a debt standpoint. I just need to make sure that customers are paying their subscription fees and those subscription fees are remaining stable. So from that standpoint, Netflix is actually a pretty good opportunity within the high yield space simply due to that fact. So Netflix is actually a current holding within our fixed income portfolios.
They got the cash flow to pay the bills and to keep the lights on. Jeff Cheek, Senior Portfolio Manager with Palatine Hill Wealth Management in Ann Arbor, Michigan. Jeff, thanks for coming on. We'll have you on again soon.
Thank you, Joel. I appreciate it. Have a great day.
All right, we are back here. S&P's stabilizing here at 23.50. I saw a tweet here from Eric Huntsider that one big order came in there and knocked out like 5-6 levels in the spoos there. So one big seller came in and we're kind of back out, holding it to 23.50 level. Dennis, any action there over the last 10-15 minutes?
Yeah, there's just bouncing. We're bouncing around on the banks. We're bouncing around on the individual stocks. I mean, we've had imbalances come out, so once you start seeing that information, it starts to give the traders a little bit more feel for where we're heading here today. I could tell you Colgate is giving a lot back. Did we have news on Colgate? Did the company say something, maybe, CL? Because this stock's now down $2 and obviously giving back a lot of its gains from yesterday there. It's got a 75,000 share sell and balance there too. Did you see anything go across the tape there in Colgate, Spencer?
No, I did not.
No, it's just
I just wonder if when you see it giving it all back, you wonder if somebody didn't say something from the company somewhere. So in any regard here, Colgate confirms actually it looks like just seeing on Twitter that there's somebody said something that they confirmed they have no plans to sell.
Yeah, but I'm not seeing that a confirmation of that.
We don't have confirmation on that. That's what they're saying on Twitter. So there's no confirmation that Colgate has said something, but there's rumors there on Twitter that that Colgate has denied that they're selling the company. That's why it's giving it back. Again, what I will say is I like Colgate in this environment. I love it at 72. So come on in, Colgate. Another buck and a half in. Come on in.
Okay, Dennis, get ready here. I know you're going to be trading this one today. ATHN just got a huge pop to 125.42. And that's because a 13D filing from Elliott Associates is showing a 9.2% stake. We just hit 125.42, filling a gap. Let's see, I can't even find a high in this one. I see. Boy, you have to go back quite some time here. Dennis, you trade this one at all? You follow it at all?
I follow it. I do not usually trade these $120 stocks. This one's a wild child. You know how I like boring. Colgate's my kind of stock. When you start talking Athena Health, that's the opposite of boring. And obviously stock popping 15%. That being said, there's levels we can look at there. And it's interesting. We've gapped down a couple of times here. Now we're gapping up. All through those gaps, Joel. I guess the stock is just gappy. Anyways, we're coming into overhead supply, though, I would say.
I'm not sure about Elliott. Were they the one that got the big Procter & Gamble stake? Remember when Procter & Gamble went to 92, Dennis? Someone got active. Can you guys...
was it Elliott?
Was it Elliott?
Spencer, I have goldfish memory here.
Chat.
Who was it? I know it was somebody. Was it Loeb? Who was it?
This was back at the beginning of March, if we can look through our trusty Benzinga Pro.
I know, and it had the big pop-up, and obviously, that was a fade. Sometimes these, opportunities are opportunities to fade, to be honest with you, long term. If I had an ATHN, I think I'd ring the register on this. That's just my own opinion, though.
Yeah, I mean, these things maybe take a day or two to play out. ATHN, if you're looking for, we're back at 22.90. I see a real
125 when you brought it up.
I see a real sweet spot. I mean, 127, 17, and 18. That was a double top from February 1st and 2nd, but we got the leak going on here, so not sure we're going to be seeing those levels again. Dennis, I wanted to ask you how those two trades did you get anything off in Procter & Gamble or J&J yesterday? I know you were looking.
No, I didn't get Procter & Gamble. I did get, and yesterday was good open for me because I was, I had the theme going in that it was a risk-off day, or at least risk-off open. So I was selling anything that I considered a Trump stock and buying, defensive. And actually, with target trading up as much as it was, I was actually able to buy the Walmart open, which was interesting. It opened flat and it was up 35, 40 cents within seconds. So I was able to quick flip out of Walmart there for a nice little gain. I got short some NUE, which is I consider a Trump stock. It opened almost flat and it came right in nicely too. So it was a good day. Like I said, it was my best trade day of the year yesterday. So there was lots of good opportunities there. But it's just volatility. Stuff will open. And if you're respecting the relationships, sometimes they can get some pretty good opportunities there for a stock to open maybe where it shouldn't open.
All right, and
It was Trian
we
and Procter and Gamble too.
yeah, the Johnson Johnson. Yeah, Johnson Johnson looks like it
Pelts. I
got
also
it.
Pelts, Joel. Just for Procter and Gamble, it was Pelts. Trian.
Oh, it was Pelts. Okay, nice,
Yeah,
nice dig in there. But yeah, I could see the Johnson and Johnson and your little defensive stocks did get a pop off the open, but it's hard when
yeah.
the market turns like that and such a heavy day. It's kind of a sell everything mentality. All right, so just real quickly, we didn't talk about GM here, and this stock cannot catch a break. It won't be selling cars in India anymore. I don't know. I mean, I've
Oh man,
avoided
these
this
things.
thing forever. Is it time to
Yeah.
step in at $32?
No, you know what? And I'm in a value trap here. I got caught in Gilead and I'm caught in Ford now here too. And both these stocks just are, destroying my capital despite me getting a nice little dividend off the two, every quarter. But it's not enough to make up for the destruction of capital. I'm in Ford up at 12.50. We knew when I bought that, and that was a mistake. I'm in Gilead from 80. That was a mistake as well. These are, in my long-term investment portfolio. They're ugly, I'm sticking with them, but I'm not adding to them. I don't like adding to losers. And General Motors if I bought General Motors, would just be equivalent to adding to Ford. Those two stocks move together. So, no opinion here. I don't know what's going on in the auto industry. Obviously, maybe they're thinking Tesla's going to take over the world. But GM 4.7% yield, Ford 5.59%. I don't know. As those dividends climb, you wonder if they're safe.
Right, and GE also. I just wanted to mention that one.
It's ugly too.
I thought the $28 level would, maybe be that whole number that found support, and forget that. Maybe now look at the $27 level. Haven't seen GE move like that in a long time. All right, we got
Ugly.
a few minutes here before the open. S&P's struggling to hold 2350. Imbalances. I bet you got a few sell imbalances out
There's some
there.
big ones. Yeah, Bank of America 121,000 to sell. It's followed through from yesterday. Wells Fargo 72,000 to sell. General Electric 152,000 to sell. Alibaba, which reported earnings, 160,000 to sell now in Alibaba. That's significant as well. Visa 51,000 to sell. Significant for a $91 stock. Also Mastercard following suit with 38,000 to sell here. Colgate we already talked about. Looks like they may not sell the company. Stock has 75,000 to sell here this morning. Pfizer 84,000 to sell. Merck 47,000 to sell. Pretty much sell imbalances across the board. You do see some buy imbalances in some of the gold miners. Those are actually trading down though, despite a couple buy imbalances in there. Chesapeake Energy, CHK 95,000 to sell. Macy's even 34,000 to sell. I mean, I'm just looking. Most of them, Joel, are sell imbalances here this morning. It's pretty much across the board.
What about Goldman? What about Goldman Sachs? Did you see this?
2,700 only to sell.
Did you see this thing yesterday? Did you see?
It just got annihilated.
Yeah, we hit 211.36 in the pre-market trading. I was looking at this on the close yesterday, and the low on earnings day took it down to 213 and change. We hit that again, so keeping an eye on that. But sure looks the way the market keeps the momentum going. You're going to get a shot maybe at the 210 level. I see 1, 2, 3, 4, 5, 6 lows there. So keeping an eye on 210 at Goldman Sachs. If you're a Bank of America trader and you're thinking about taking some of that selling balance, maybe I would try and wait till it got closer to 22. Bottom there in March, also bottom there in January, found support there in December as well and November. So 22 is a level I like on the downside here in Bank America. All right, Spencer, you want to wrap things up for today and preview the final show of the week? And you're going to Chicago,
Yep,
right?
I'll be in Chi-Town tomorrow, so Joel has control. So please don't burn anything down. No, but seriously, David Tutwill on the show tomorrow. He's the co-founder of Maglin Capital. He's also the PM there, so always excited to have him on the show. Hope you enjoyed our show today. Really enjoyed Jeff on it. I thought that was a great interview, Joel. New guest. Thought he had some really good insights. So hope you enjoyed the interview with Jeff Cheek as much as I did. If you missed any part of our show today, you can rewind it on YouTube or catch the podcast on iTunes, SoundCloud, and Stitcher. Want to remind you to check out Benzinga Pro. It's Benzinga's real-time news platform. To learn more, go to pro.benzinga.com. You can also email me if you want to get hooked up with a free trial or a demo. My email is spencerisrael@benzinga.com. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. That's it for us for now. Have a good rest of your Thursday. Good luck out there. We'll see you folks on Friday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.